Why don't we start with your word of the day?
Sure. It's volatility, Frank. I mean, that's what we expect. April was, very few days that you were even 1% up or down. I mean, it was more than that. So I think given where we are, not just what's going on in terms of the global events, but also in terms of earnings and companies, giving us guidance. So a lot of volatility ahead. And I think a lot of opportunity ahead. Volatility does not necessarily mean that you should have angst, but it also means that you have opportunity ahead.
When we're looking for opportunities, how are you viewing the tech trade right now, specifically chips? We've seen chips move about 45% from their low back in April. Do you believe that's sustainable? And is it also sustainable for chips to maintain leadership?
I do think they will maintain leadership, but I do, again, I would add the volatility word to it. You've seen NVIDIA now at 130, Qualcomm's come back, Broadcom, a lot of these that were taken for dead are now coming back again. But you'll see some give and take depending especially on how the tariffs are and really what the demand is. I mean, what we're going to end up doing, Frank, is once we get through this and you get some type of stabilization in terms of tariffs, earnings are going to matter, cash flows are going to matter, and really what products all these companies have. So I think as the haze lifts, you really have to go back to fundamentals. And companies like NVIDIA and Qualcomm, two of our other companies that we own, we really like the fundamentals long term because they do have the IP that we think can provide earnings growth in the future.
When we're looking at this rally that we've seen off the lows, do you think this is something that you would, quote unquote, chase? Or is this something you might want to fade? And I also want to ask you about bonds. We were just talking about this earlier on the show, the 2-year yield just kind of hitting 4%. Is that creating competition for stocks in your mind after this tremendous rally?
I do think in the short term it will, because investors will say, hey, I'm getting 4% to sit out at this point, especially as the markets come back. So you've kind of used that as an approach to diversify. But I do think, 4% is an important number for the market to look at, and especially going on the 10-year, because that's where really the companies look at as to what's our cost of capital. So I think that's going to be really interesting as well.
All right, so we got to get your pick for today. What is your pick and why?
So we like Air Products. Frank, it's a leading industrial gas company. They have long-term contracts, a couple of catalysts here, new management team, new CEO has been installed. The company's also focused on their contracts. They've gotten rid of a lot of the clean hydrogen contracts. They're really focused on now looking at their customers. And again, the contracts that they have are not just short-term. They're 1 to 3 to 5 years. And as we get more production back to the U.S. over time, you want to have companies that have steady earnings, great balance sheets. Company has almost a 2.5% dividend yield. So we really like this play. It's been undervalued. It hasn't really been looked at. Stock's been out of favor. And, we expect double-digit growth for a multiple that's close to 20. So I think this is going to be something that we want to hold as a core holding in our portfolio.
Really quick question, Sarat. We got to make it quick. We've seen industrials take leadership on a sector basis year to date. Is this a stock that's going to benefit if we continue to see this growth in industrials?
I do. I think because as demand comes back to the U.S., you're going to have companies like Air Products benefit because they're the key supplier for all these companies to grow their own production.